Hi, everyone, and welcome to the Friday, July 22nd installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson, our East Coast is Bob Grove, and our host, as always, is the Silicon Valley Business Journal. Hi, Scott. How are you?
I'm well, thank you. How are you?
Well, it's been an interesting week. Let's begin with Netflix. 970,000 subscribers in the last 3 months. And yet their stock went up. What's going on here?
Well, I think, it's one thing to say they lost nearly 1 million subscribers, and that's sort of the new normal for Netflix. This was a growth engine for years and years and years. And now they're just getting beaten up by competition. They're getting beaten up by the fact that people are going back to the movies, and they haven't been able to pivot all that well to fend off either of those. And consequently, when they say, oh, we only lost 1 million people in a quarter, in a 3-month period, the stock goes up. But think about how much it has to go. It went from 700 to about 150. The just takedown of Netflix has been one of the big stories this year. It's still, I think, a major player. It's still a leader in streaming, but the streaming game has changed so much, and Netflix just really has to adjust because people are fleeing. Investors are fleeing.
Is this people quitting their subscriptions, or are they flushing out bad accounts? Or, I mean, it seems like if you're going to take a shot, you might as well just go through your rosters, your roles of customers, and start taking out the dead ones too.
Well, I mean, some people are leaving, I think, because they're saying, gosh, if I have Hulu and Disney and Apple, and, all these things are starting to add up. We're heading into a recession likely. People are saying, I've got to trim somewhere. But I think it's more, there's a lot of password sharing. So Netflix was a little sloppy with its accounting and all of that. And I just think the numbers that people are seeing from, say, a Disney Plus are starting to really impress. And what Netflix has been doing that was really sexy and exciting for a long time is becoming so commonplace now that it's just not where people see the future. And Netflix has to change because, after all, what is a stock? But, somebody buys it because they think you're going to do well in the future. Netflix has not proven that it is the future of streaming, even as it has been the past, and is largely the present, but it's got to do something to get the excitement back. And I guess the main thing is, somehow siphon people off TikTok, because that's where a lot of people are going, but also get some new and exciting programming a la, Stranger Things and things like that.
Well, they need a new flagship show, don't they? I mean, Stranger Things paid off big, but, it's what, 4th season now?
Right. And they have a lot of these sort of one-hit wonders that maybe turn into more than one-hit wonders. And I think that's what they are going to try to do. But the sort of Netflix model of, hey, we've got everything out there and you can stream it. Remember that TV show when you were a kid? Was good, but now it's just not keeping up with, the Marvel, Star Wars, et cetera, that Disney has to offer. And even Apple now, Apple won the Best Picture Oscar. They're a major Hollywood player as well.
Now, the worrisome thing, I think, is the stock went up. Good news, except part of it is because they're changing their business model, cracking down on password sharing, introducing lower place tier with ads, all of that kind of stuff, which kind of diminishes the experience. So you can see that they might get more profitable, but they may not be as appealing as they were because of all the other dynamics besides content and productions.
Right. And that's the big experiment, to see if people, and by people, I mean families, are going to be willing to put up with some ads on a company that never had them before. And, there are a lot of millennials, let's say, that grew up without ever watching ads, because they don't watch regular TV, right? They're just streaming whatever. And this is going to be a big experiment to see if they can increase the number of subscribers, but at what cost? But make no mistake, Netflix will always have tiers available without advertising, I'm sure.
I mean, I came out of the print world, obviously, and part of the game is, you get subscribers, but you also give away free copies. And when you approach your advertisers, you say, well, actually, each issue is read by an estimated 7 people, only one of which is subscriber. So we want to bill you for those 7 people. If you get rid of password sharing, you've gotten rid of that number at Netflix, right? I mean, they could say, well, we know that the passwords are getting passed around and maybe 7 people or 8 people are actually using this one password. So there's your audience advertiser. Now they can't do that. It seems like they're pulling in 2 different directions. I'm not sure how this works effectively.
Right, except you can say that a lot of the other subscriber services are in both of those directions already, and they make it work. People who say, look, I really don't want to see an ad when I sit down to watch a movie. I'm going to pay a little bit more. Hulu, for instance, you can do ads, you can do without. And I just think that's going to be the standard. And Netflix just has to change I'm pretty sure there's a big faction inside Netflix that really doesn't want any ads, but they have to change and they can't stay with what they're doing and remain a leader. And so now they're hooking up with Microsoft. They're going to have this ad supported thing. And who knows if it will bring in more people. But again, there's probably enough of a force inside that says no ads. We're going to keep that tier remaining. And I think you can still have the same Netflix experience you had before.
Yeah, just one final thing. My family just decided to a binge Lost, of all things. No advertising. They said it's a different show. That a lot of the strange jumps and everything disappear when you have a continuity of show without the breaks in between.
Right, and that's the perfect example. I mean, you think of Lost, you have no advertising, no writer's strike that took like a whole year off. I mean, You've just got uninterrupted episodes of a cool show.
Okay, next, as long as we're talking about stock companies crashing, Snapchat. Oh my goodness. Stock went down 26%. They missed their estimates on revenues and profits, and they wouldn't even offer an advisory. That's not a good sign. That's a company that's in serious, serious trouble.
Right. And I think it spreads beyond Snapchat. As you and I speak on a Friday morning, Snapchat reported last night, Twitter reported this morning, similar results in terms of, we've got a lot of users, but we're not making anywhere near the money that we should. And it's interesting because that used to be, we're not making anywhere near the money that Facebook is making, or now Meta. But even Meta is hit with this. I think you've got 2 big factors here. One, TikTok siphoning off users, and we've talked about that in weeks past. But also, I think we're starting to see the Apple decision on app privacy come home to roost for some of these social media companies. Remember, they can't track you now as much on your iPhone. And at first, that wasn't as controversial because people thought, well, good for Apple, but maybe it's just performative. And then Facebook admitted it's costing us billions of dollars. And now I think we're seeing the other social media companies say, hey, if we can't track you, we can't make as much money on targeted advertising. And that's a pretty powerful statement to make in this day and age. So I commend Apple. I'm obviously a big privacy advocate, but I think these companies are going to have to adjust because that decision is really hitting their bottom lines.
The TikTok phenomena is getting a little frightening, I think. This is obviously is a company that has some questionable things about it, and yet it is becoming the dominant force on the internet right now. And these kids are giving up tremendous amounts of information to not exactly a good player on the world scene right now.
Well, right. I mean, you're talking China, and I agree with everything you just said. But I would say this is endemic of all social media. I mean, you say kids are giving up information to a not very good entity. Well, how would you describe Facebook? How would you describe?
Well, that's true.
We know what Facebook and Instagram have done. Instagram, we know what they're doing to young girls who are on the platform. And so, there's a concern with China. I get that.
I guess it's probably my bias. There are bad guys versus the other guys, bad guys. Yeah.
Right. And we've seen, these things have been front and center since 2016 with social media companies, period. And TikTok is that plus the foreign challenge. And I just think this stuff is across all platforms. We're giving up too much information, and companies are proving, hey, when Apple steps in and says you can't get all that much information, they're losing billions of dollars. So clearly privacy and security are baked into how these companies make money. And that should worry us every single day, every time we log on to these things.
Okay, Tesla's earnings. It seems to be they seem to be hanging in there despite the fact that they got big production problems, supply chain problems in China, and yet the stock rose 10% yesterday.
Yeah,
Closing at over $800 for the first time since May.
I have to give it up to Tesla. I mean, two things here. One, the number of cars they're able to produce in a supply chain crisis, like you mentioned, and the stock price moving forward at a time when tech stocks are getting beaten up. These guys are starting to reach outlier status. They're about to split again. They're up above $850 billion in market value, closing in once again on $1 trillion. You see their cars everywhere, despite the fact that it's very hard to buy not only an EV, but a new car, period. They're cranking out new EVs. So there's something in there that's working for them, at least in the short term, and investors love it. Now, what's working against them right now, a couple of headwinds are, like you say, the supply chain concerns, and also I think investor concerns. How much Tesla stock is Elon Musk going to have to unload if and when the Delaware court comes down against him? Prediction here in the Twitter battle. This could get ugly and it could get expensive for him, and it's a distraction.
Speaking of unloading, they just sold 900 million. Well, they sold $900 million worth of Bitcoin last quarter.
Right.
That's 75% of their holdings. Remember when they went into crypto, it was like, wow, this is the future. And now they just dumped, nearly all of it. Now they're saying it has to do with other matters, but did that have any effect upon cyber currency this week?
No, it didn't. It's actually been a strangely strong week for a lot of crypto, especially Bitcoin and Ethereum. They went up. I think maybe people just think they're buying the dip. Who knows what the dip is, though, at this point when it comes to that stuff.
How would you know a dip in crypto? I mean, everything is disguised as something else.
Right. And for the Tesla move, I think they needed to pad their bottom line with extra money. I'm pretty sure they sold a lot of that crypto at a loss. But again, one of the things people didn't do, and this is probably good if you're a Tesla shareholder, is turn Tesla into a Bitcoin play, because that's extra risky, especially for a publicly traded company on, on the NASDAQ. So whereas MicroStrategy, because of Michael Saylor's habits of buying a ton of Bitcoin, seems to be a Bitcoin play, I think Tesla made a good move in unloading a lot right now at a time where crypto is so off the charts crazy. To say, hey, we are, as a car company, an EV company, a place of stability and production in a time where those things are in short demand. In short supply, I should say.
Elon says because of the uncertainty of the COVID lockdowns in China, we just wanted some liquidity. So It doesn't sound like, he's desperate. Okay, well, as long as we're on that, Twitter and Musk, they're going to court in Delaware, Chancery Court in October. Do you know about this court? I mean, I saw there was a big feature in the New York Post about it. This is the Old English Chancery Court. I think it's got a specific name, but that's what it is. And it goes all the way back to, the British legal system, common law back 400 or 500 years. I mean, it's in Dickens. And this is where it's so cozy that the two attorneys know each other, know the judge, they play golf together, they go have lunch, formal and yet informal. And if, it seems to violate some of the, the basic American rules about, interference and conflict and everything else. So it should be something. Are they going to open it up? Are you allowed to go in and see it? Are you going to go back to Delaware and live for a while?
I don't know. I've been reading a lot about what the Chancery Court is. I think a lot of us have. And I think you sort of get this image, of sort of an old school court. You see them wearing the long wigs or whatever. And I think also one thing that comes out is these guys don't mess around. This is not going to be one of those protracted jury courts. This is going to be quick. They are zeroed in, not on testimony a lot, but on business matters and what the numbers mean. And again, we're not privy to everything, but from what I've read, that's not good news for Elon Musk when it comes to Twitter, because again, he signed a contract for this amount of money. So does he have to buy the company? On the other hand, does Twitter even want an owner that doesn't want to own them? But I think a lot of money is going to change hands because of what they're doing in Delaware. And I think most of it is going to flow towards Twitter.
So Elon can't appeal to the cheap seats and uses charisma and the media and all that.
Well, he's doing
This
that
is
right
un-
now, but I don't think that has any effect on the Delaware Chancery Court. That's another thing you sort of get is they're not going to have to tell a whole bunch of jurors, as we did say during the Theranos trial, hey, we know there are documentaries and books and tweets on this. Try to ignore those if you can. These guys are going to be laser focused on how much of a check he has to write.
Yeah, I don't think the judge is going to be surfing the web in the morning before he goes into the courtroom.
I doubt that, right?
Okay, real quick. Silicon Valley prices, home prices. I got a shock last week. I got more real estate flyers, and I was just casually going through and I saw the listing price and then I read the sale price, and my mind literally reversed them because the sale price was lower than the listing price. And I had to catch myself and I went, oh my gosh, houses are starting to sell for below list. We haven't seen, I was a much younger man. I had dark hair when the last time that happened. So here we go.
We were all much younger. Yeah, well, it's interesting. And talking to, I've done a lot of stories on this lately, and talking to real estate agents, and they went from, hey, instead of 20 bids to 10 bids, now they might get 2 or 3 bids. And instead of a whole bunch of, houses in Silicon Valley were selling for $1 million over asking.
Yeah.
And now for a while, we're starting to see.
They were selling that fast.
Yeah, they're on the market a little bit longer. Remember, they're not on for all that long, because remember, we don't have a whole lot of inventory out there. Right. But part of the reason is buyers are stepping away for a bit and saying, a 5.5%, 6% mortgage, that's a little high given the recent numbers. Prices obviously are still high, even as they start to come down. But there's almost a little blood in the water. I think what agents are saying is it's, you can't really call Silicon Valley a buyer's market at this point, but it's becoming a little less of a seller's market. Things are cooling and prices are starting to drop, and people are starting to accept a little bit below asking. And you're right, it's the first time in a long time. And we'll see how far down that continues to go. I think the furthest down from month to month that we saw in, say, San Francisco was a 7% drop from recent highs. And that's about 100 grand. Mm-hmm. If that goes down to 10 and 15%, I think we're talking some real money here, and buyers might start to swoop in.
I'm starting to notice also the work around the neighborhood is slowing down too. I have a neighbor that's doing a major reconstruction on his house, and he just shook his head the other day. It said the building trades materials are getting so expensive because of inflation that he's basically paying close to twice what he would have paid if he had decided to do this a year ago. So,
yeah, it's interesting because, right, often in recessionary times, if people are not buying and selling houses, they're working on the houses. That's why Home Depot has always been such a recession-proof stock. But I don't know that we're that far yet.
We're not there.
Right.
And these are contracts that were made 6 months ago and that sort of thing.
Good point.
So, as we said, these things start slowly and then they get fast real quickly. They accelerate. It'll be interesting to see. In fact, that's the next thing I have here. We got a lot of earnings coming out next week, right? I mean, this is your earnings week. And I read in one place, there's growing optimism that the market bottomed in mid-June and we're beginning to come back. On the other hand, they're saying NASDAQ could be ready for a pullback with all these earnings coming out next week, unless they're really, really positive. Goldman Sachs says the bear market isn't over, and AT&T's CEO came out and says he feels the same way. Next week is also when we determine if we are actually officially in a recession, right?
Right. I mean, officially, but look, right. You're talking about earnings. That's going to be big. The Fed is likely to cut interest rates again pretty deeply. And so that will have an effect on the market. Not sure exactly how people will react, but yeah, there are a few things going on right now that are assuming recession. And that often is enough, right?
Self-fulfilling prophecy sometimes, yeah, because it's about consumer, optimism too. If you think there's a recession, then you're going to behave like one.
Right. And we still haven't seen, at least around these parts, widespread job cuts. And if that happens, then, all bets are off and all spending stops, really. And that's when you start to get that domino effect of things really slowing down.
Well, speaking of the Fed, you want to make a bet on how many points they raise it next week?
No, I do not. But look, I mean, they're talking what, 75, maybe even a full point. I don't know. I don't know what they're thinking.
275s in a row would be kind of scary. And if they go a full point, they're playing with, they're using machine guns now. They're bringing in the heavy artillery next.
Well, look, I mean, the Biden administration is still dealing with inflation, even after one of the 75 basis point hits. So, who knows? They may need to bring out the big artillery for this.
Okay, well, let's end it with some good news. Well, you take good news where you can find it at times like this. But the FCC is announcing it's cracking down on auto warranty robocalls. It's not a big thing, but it's that one of those little things that just makes your life a little bit worse. And now it's going to make it a little bit better. I thought I heard birds outside singing as I read this. And I realized it was because my phone wasn't ringing from the latest auto warranty robocall.
Yeah, I mean, there's some days when that's like 60% of the communication we get from the outside world. And you're like, hey, the phone's ringing. I wonder who it is. And then, oh, yeah, okay. So good for them.
That's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcast, Apple Podcasts, LinkedIn, and of course, our YouTube page. Have a great weekend. We'll see you next week. Bye-bye.